Well, I think the critics of neoliberalism, who tend to be on the left and center left and the radical left, they don't agree as to what the causes of the crisis were. There are basically two schools. One was that it was a failure of regulation, the repealing of Glass-Steagall, of a lot of financial deregulation, that this led to the crisis. And if there had been better regulation reining in greedy people, then this would not have happened. And this interpretation of the crisis tends to focus almost exclusively on the United States, and Britain too, to some degree. There's another much more fundamental analysis, which I believe is correct, that views this as intimately related to the evolution of the entire global trading system from the 1980s onwards, and particularly to the toxic interaction between trade surplus countries, the three biggest in the world after the United States, China, Japan, and Germany, and the perpetual trade deficit countries, the United States, Britain, and the Mediterranean countries, including Greece and Spain. And in this view, you can only understand the financial bubble as something that was made possible. It wasn't caused, but it was facilitated by the recycling of the money from the trade surplus countries. The Germans recycling their money by loaning to the Mediterranean rim in Europe, and the Chinese, and to a lesser extent the Japanese, recycling the earnings from their trade surpluses with the U.S. In the form of ultimately and indirectly loans to American homeowners. And you see this remarkable correlation in all of the countries with sustained chronic trade deficits of real estate bubbles. And the missing link is the surplus countries have chronic surpluses in manufactured goods. Germany to the south of Europe, China and Japan to the United States, and also Germany to the United States through China. For example, much of the value added in the iPhone actually originated in Germany and Japan and South Korea, and it's kind of cycled through low-wage assembly in China to the United States market. And that money had to go somewhere, and it went to treasury bonds and also to seemingly safe financial assets, like collateralized mortgages, which then permitted the lenders in the United States to make more loans, which, since they profited from fees, they did so. So depending on your analysis of the system, it's either a matter of tightening up regulations going back to Glass-Steagall, if it's primarily a crisis caused by financial deregulation, or if it's a global imbalances problem, as the term that is used, then you have a much more difficult challenge of rethinking the entire global trading system as it has evolved in the last generation. The attempts to re-regulate finance in the United States by itself without doing anything about these vast pools of money sloshing around the global system as a result ultimately of the pro-industrial policies of China and some of these other trade surplus countries. It simply means that that money is going to pop up in some other form outside of the regulated financial system. It may be the shadow banking system. If that's regulated, it may pop up in currency prices, in commodity prices. So from this point of view, sometimes it's called global Keynesianism. That's the fundamental problem underlying these bubbles in the stock markets and also in real estate markets. And that's the connection between these bubbles and the trade trade deficits in countries like the United States, Britain, and Spain and Greece. There's a general misconception that low wages are the main source of the Chinese advantage. That's actually not the case. According to a number of experts I've consulted with in Washington, low wages account for maybe 20–30% of the China price. And the remainder is divided between the currency tariff, the deliberately undervalued Chinese RMB, and the overvalued dollar that results from it. And somewhere up 20, 30, 40% comes from subsidies to multinational corporations that are given to multinationals by the Chinese government or by provincial governments. Free land, subsidized labor, free infrastructure, various things like that. So The basic problem is we have a world economy in which you have 3 of the 4 largest industrial nations, China, Japan, and Germany, have specialized for some time. They've used different methods, but essentially since the 1970s, 1980s, and in the case of China, since the 1990s, they have specialized in targeting the American consumer market. And the United States, for various reasons, has tolerated this, but it was an inherently unhealthy and unstable situation. In the long run, if you're going to get rid of these global imbalances that contribute to asset bubbles and real estate bubbles in countries like the US and Britain and the Mediterranean, the Chinese and Japanese and Germans need to consume more goods, both made by their manufacturers but also by Americans. And the United States needs to export more and import less and consume more and invest more. And in the ideal world, all of these countries would be moving towards this resolution simultaneously. But what has happened after a brief period of cooperation right after the crash, essentially the major capitalist countries are just pushing their own interests ruthlessly. The US, the dollar has been devalued, not vis-a-vis the Chinese currency, because we don't have the power to do that and we haven't had the political will to retaliate against them yet. But it's been declining vis-a-vis the euro and various other currencies in the world to the distress of other trading partners. China has been pouring credit into its already overbuilt export sector, and that's going to end unhappily, probably, as happened in Japan, because Japan persisted in export-oriented growth far too long after it should have switched to more domestic demand-driven growth. So it looks as though the world, there may be another crash at some point. It may not be of the severity, but the countries of the world, both the surplus countries and the deficit countries, are not taking the corrective actions that would be needed to deal with the real root of the problem, which, as I said, arguably is not a lack of financial regulation, but it's this very dysfunctional interaction between countries that want perpetual trade surpluses and countries that used to be their targets and their consumer markets, where the consumers, as in the United States, are just tapped out, and their wages will not support further mass consumption at the level necessary to support the mercantilist countries or the export-oriented countries. And at the same time, the borrowing just isn't there. You know, Americans, first we relied on wages and then on credit to sustain consumption, including a lot of consumption driven by low-priced imports. And when the American consumer is tapped out, that's bad news for the US, but it's also bad news for China and for the South Koreans and Japanese and Germans who have built a lot of their factories in China. The premise of neoliberalism as it matured in the 1990s and then the 2000s under Bill Clinton and arguably George W. Bush was that the world is moving away from economic nationalism towards a rule-governed global market, which would be like the United States market. And in the same way that the states of the Union, you know, they can compete to some degree for the location of production, but they don't have tariffs. There are limits to the regulations they can use as subsidies. That basically we would deregulate trade and investment. And corporations would make their decisions about where to locate production on the planet on the basis of purely economic considerations. And because this would lead to enhanced global welfare, all countries everywhere would benefit from this simultaneously. What we have found was what probably should have been foreseen in the first place. No one outside of the English-speaking world believes this theory. The British do, we do, maybe a few Canadians and Australians do. The Germans do not, the French do not, and certainly the East Asians do not. The East Asian experience is of a strong, protective, paternalistic state identified with an ethnically homogeneous nation that is the promoter and sponsor of their private sector. It is not a neutral umpire in a game where it doesn't take sides in the competition. And so what you have to put back into the theory is what was left out of neoliberal theory, and that is the role of nation states as economic actors and not simply as neutral umpires, which are impartial between their own producers and foreign producers. If you don't do that, then you're going to end up with two world economies with this toxic interaction. There's going to be the Anglo-American zone, where the governments really don't care whether industry is, the aerospace industry is within their borders or not. And then you will have what I think of as the Eurasian zone, from the English Channel on the east side all the way to the Pacific, where the purpose of the state, in the eyes of the people, is to promote national industries. And in the long run, this is a self-defeating strategy for the economic nationalists, because it means that everybody wants to have perpetual trade surpluses in a few highly prestigious industries. And you see this, for example, in the discussion about clean energy, that we're losing out to China, which is subsidizing windmills and high-speed trains and solar panels. But one of the reasons the world economy is in trouble now is because all of the major industrial countries directly or indirectly subsidize their automobile industries. So there are too many automobiles chasing too few consumers in the planet who are paid enough to buy these automobiles. You find the same thing in aerospace, where there are massive you find the same thing in agriculture, where all of the industrial countries just have rotting crops that have been subsidized, and they try to dump them on third parties to undercut their rivals. And this is a tremendous misallocation of resources. But on the other hand, so the neoliberals are quite right. Their vision of a rule-governed world is one in which you wouldn't have economic nationalism like that. However, their solution is unrealistic. Their solution is that countries simply will not care anymore whether they have an aerospace industry or whether they have an agricultural industry or whether they have a steel industry. And there has to be some third approach that we can speculate about that would not lead to chronic paralysis and overproduction, as the economic nationalist strategy does. But at the same time, it's not politically naive, thinking that you're just going to have one big happy global market. And if China has no aerospace industry and India makes no automobiles, then their governments will say, oh, well, that the market has spoken. That's not going to happen politically. Well, there is an alternative that would allow countries to be represented in key critical industries that are important both for their spillover effects in their domestic economies, but also for a factor that we haven't discussed, which is national security. And all of these things are essential to national security. If you're a great power, whether you're a rising one like China or an established one like the United States. And that is economic diplomacy, which no one ever talks about. The two options we have are trade war, the economic nationalist approach, where it's just you beggar your neighbors and you try to promote your own interest at the expense of the system, and a very naive and utopian global market in which all national boundaries have vanished, and you either have nation states or global governance authorities acting as neutral umpires, while corporations just make all of the decisions on the basis of short-run economic calculations. The alternative is to treat the industrial policy and trade policy the way you treat other forms of trade, where you accept that countries have legitimate interests, and they will simply cut deals amongst themselves. And those deals can take different forms. It may be, for example, China has informal in-market production requirements of multinationals that if they're going to sell in the Chinese market, they have to do a certain amount of the manufacturing there in China. They have to train Chinese engineers. There's no reason why all countries could not do this. It would be a deviation from the ideal of a perfect free global market, but that's never existed. It's never going to exist anyway. And it could forestall trade wars and protectionism, because it would be a rough and messy kind of solution to the conflicts. But I think that's probably the best hope to avoid what is a real possibility, that is everyone will try to export and no one will want to import. And then you end up with massive misallocation of resources, trade wars, protectionist blocs, retaliation, and a balkanization of the world economy around the major industrial countries. You can't have modern liberalism in one country. You know, Stalin claimed you could have communism in one country, and Trotsky said, no, you have to look at the whole global situation. I think that's true with modern liberalism. You have to have an environment in which the nation state that you're trying to reform has the flexibility to engage in whatever sort of reforms you want. And you also want to take advantage of the economies of scale made possible by technology and technology-driven globalization, because we hear largely about the problems of globalization. There are enormous benefits. If you look at the most contested industries, the ones that all the countries want, they're the ones where you have increasing returns to scale, and you can have enormous efficiencies by having a fairly small number of aerospace manufacturers, pharmaceutical designers. And so you actually want to exploit that. You don't want to have lots of little tiny isolated markets. So you have to think in a way that no one really has thought about adequately yet. You're not going to go back to the vertically integrated corporations within an isolated US market where they have lifetime employment for workers from the time you're 18 until you retire with the gold watch and the pension. So you have to rethink everything. And you have to begin at the planetary level, even though it's difficult, but say, well, okay, just what is the ideal world that is plausible that we could try to promote? And then within that, what is the national system going to be where we can both avoid the dangers of the global context, but also reap the benefits of increased integration and interaction with other societies?